Welcome back for another top-notch video. This week, guys, we'll be talking about the week of May 20th through May 24th. As always, this is a TSP Roth IRA channel. We talk about the CSI and F funds for retirement accounts, or if you have an IRA, IVV, VXF, EFA, and AGG ETFs. These follow the S&P 500, small caps, international markets, and bonds. That being said, we kind of go over a general overview of each of the funds, kind of go more into depth about each one and more of analysis, and we give our final allocation of where we're at. If you guys have any questions, you can go ahead and write those in the comments below, and we'll dig right into it. The first thing we like to look at is a site called TSP Talk. On TSP Talk, there's a guy named Tom that does some commentary. We just like to look over some general things on their website. Go check them out if you're interested. As you can see, here's the share prices for the close prices through Thursday. In regards to what we had for this week, we had a down week for all our TSP funds. The S fund losing over 2% overall, but overall for the year we're up 14% for the year. But each one of our basically our equity funds did lose money this week. So we had a kind of a brutal week, 4 down days in a row. Going forward, we'll hopefully have better funds. The F fund did do pretty well, so that was kind of a one positive shining light in that. And overall, I think we had a move that we did a couple weeks ago. I think that panned out pretty well for us. Looking over that general overview with the S&P 500 or IVV C fund, basically we've had a critical level all the way since back in 2018. A lot of consolidation in these charts over the long term. As you can see, and again, Tom does this commentary, he drew this red line in here, basically showing that the markets have been kind of around this area for some time, and we're currently around this area again. We're waiting to see if it breaks to an upside or a downside, but that's just something to keep in mind as we roll forward. If we're looking at the S&P 500 chart, as you can see, we are getting close to that 200-day moving average, but we have not broke that yet. They drew in the 100-day EMA, but I don't really go off of that. I typically just check the moving averages for the 50 and the 200, not the 100. So he drew that in there. I don't know what we'll see. If I would like to see this trend line here that he drew is holding. It is kind of a bear flag, so keep that in mind. And that is for the C fund or IVV. For the S fund or VXF, we are below our 200-day moving average. As of Thursday, we did have an open gap here. We'll have to see if that gets filled. Typically, open gaps do get filled, so keep that in mind. But our moving averages are starting to slump downwards here. And being below that 200-day moving average is not a positive thing. EFA is also below its 200-day moving average, also in a bear flag here. We'll have to wait and see what happens with this market, but just keep that in mind moving forward. And of course, we have AGG, which is doing quite well. It's done very, very well this entire year. We had another move up this week, so that was great. We are not currently in AGG, but we're considering moving into that fund before the end of the month. So maybe next week we'll do a short-term move into AGG until stock funds start acting appropriately. So that's kind of just a very basic overview of each of our funds. Moving more into depth and detail, the first thing we look at is IYY, which is a general market overview fund. This is basically all market participants, professionals, non-professionals, everybody, and what's happening. As you can see, they have the same line drawn in here that Tom had drawn in there, so that's very important. It is currently sitting above that line and it's been bouncing off that line, so that's something important to keep in mind. But if we look at it on our chart perspective for IYY, you can see that the weekly chart price-wise is starting to move down, and our oscillator for the first week is negative. If we see a price cross here, the last time we saw a price cross was back in October, and as you can see, when we had that cross, we had some detrimental capital losses. So please keep that in mind. On our 2-day chart, things do look a little better as the oscillator is coming out, but the blue line is still way below the red line, which is not really a good position to enter into. On our 4-hour, we are still negative, so keep that in mind too. Our oscillator is sitting at negative 2.58 with no positions really or whatnot. And the reason we look at IYY is this kind of gives us our general idea is, hey, is it a good idea to invest in markets or is it not? It's kind of our very first big question that we like to look at. We like to look at big picture first and then dive more in depth into our indice funds. So moving right on into our indice funds, the C fund, the S&P 500 / IVV. As you can see, they have this critical line here. It's a little higher on this one. We are sitting above our 200-day moving average, but it's struggling right around this line here. We'll have to wait to see if this breaks the upside or the downside. Our moving averages for the 20-day and 50-day are starting to head downward, and our 200-day is kind of just at a very indecisive, not a really up curve or down curve, just kind of right in the middle. So we'll have to keep that in mind, especially with the gains that we've seen this year for IVV. On a chart perspective with IVV or the C fund, as you can see, we are about the same thing we're looking at with IYY. The weekly posted its first negative oscillator week here, so that's not a very positive sign. We might see a cross here. It hasn't crossed yet, but that's just one indicator that we don't really want to be in this fund. On a 2-day chart, we are doing a little bit better. It's starting to come out, just kind of like IYY. And then on a 4-hour, we really don't have a position. The only thing different here is the oscillator did change from a negative to moving back to a positive, but that blue line is still below that red line. Not really investable in until we see a cross, especially with the weekly on its way down. So that's the market I have for IVV or the C fund, S&P 500. Moving right along to VXF or the S fund. This is small caps. So with small caps, we are below that critical line that we see here. We are below the 200-day moving average, and I could definitely see this going farther down with no support below it for some time. So keep that in mind with VXF. I don't think this is a good place to have money just yet because we are below all our moving averages. We could see it blow through those moving averages, kind of like we did back here in January, but just keep that in mind. It isn't easy for it to blow through averages. Obviously, right here we had some. It struggled a little bit until we got above those averages. Wish it would have stayed above them, but it did not. Looking at it from a chart perspective, for VXF, we can see that we do have a cross here. We have our first weekly. Usually when we have a cross and a weekly oscillator at the same time, that means bad things are ahead or good things are ahead. In this case, when it's going down, bad things are ahead. 2-day looks a little bit mixed, so that's even worse. That's not so good. And our 4-hour looks like it's trying to make its way out right now, but not investable until we see this line come back above the red line. So overall, for VXF, not a good place to be at. Not a place you want to really have your funds right now. Moving to our international markets, so that's EFA or the I fund. With EFA ETF, we are sitting kind of right in the middle of our 200-day moving average, so we'll have to wait and see where that goes. It is up today, Friday, almost a whole percent, so that does get us above that 200-day moving average. But we are below our trend lines that we drew here, and we are below our 50 and 20-day moving averages. And this line just recently came out of a bear market, as you can see, and now it's starting to flatten out. Maybe it might take some weeks or months to flatten completely before we start to see that fund really start to pick up and head back into that 70 range we saw almost 2 years ago. On a chart perspective for EFA or the I fund, with the weekly chart, we are also coming down off a very high, and we're about to hit that line where we might see a cross. We had our first negative oscillator, so not a place to really invest if you are not in the markets. I wouldn't recommend going into this fund at this time. We did see it bounce back above on the 4-hour chart, which is always positive, but I would like to see a little bit more. I would like to see this 2-day catch up just a tad bit more to convince me to maybe invest in this EFA fund. This one is, since it's international markets, it is affected a little bit by tariffs and whatnot, so just keep that in mind with the news that we have. And the last one we're going to look at is our bonds, AGG ETF. With bonds, AGG ETF, or the F fund, we're looking at a very nice positive blue line here rising above. We see this 200-day moving average moving up in a slow rising manner, which is great. It is above all its moving averages, and this is a very, very tradable line. Looks very good. It's towards the bottom of this. This would be a very good fund to invest to, and like I said, I think we'll end up probably moving some capital to AGG next week, so check the comments below and the Facebook page to see when we make that move. It's going to be a short trading week next week, and we're going to make that move. That'll be our last move for the month, and we'll see how that goes. Overall, I think I have the most confidence in AGG at this time, even though it doesn't make as much as some of our stock funds. When stock funds aren't doing well, we usually migrate to the G fund, but since AGG is now out of its bear market that it used to be in for the last year or so, we could probably start investing in this, making a little bit more for our buck in this fund. Overall, the only other thing I want to show you guys is this chart here, which shows we made our move on May 9th, and today, we were going off of last night's share prices. The market isn't closed yet today. Overall, the S fund, we've gained 3.7% because we've been in the G fund, so that's a really good percentage gain back from the market. We, I don't want to say we time things, but we never time things. We base our moves off of probability, but that's a very good probability move. Now we just have to get back into the market. We don't want to be too greedy when we get back in, but right now I don't really see any good positions to get back in at this point. Not yet. Looking at maybe going into that F fund and picking up a little bit more percentage. If we were in the F fund this whole time, we would have been over 4% gain back on the market, which is an excellent move for the Top Notch channel. So where are our funds at? If we scroll down, where have we been at? We are still in the G fund this week. We have new monies coming into the S fund. We might change that up a little bit, maybe change that to the F fund bonds, but we'll have to wait and see. But this is where our current allocation is. Really do appreciate you guys watching this channel, and if always, you can like, subscribe, or share, or you can write a comment below. Thank you so much for your time. That's another top-notch video. We'll see you guys next time.